So warriors, with regards to understanding investments. Now I recognize that many of us are well informed in the area of finance. However, given the large numbers of jobless and homeless warriors, let's just agree that we can all stand to learn a little more in this area. A friend of mine were talking about, businesses and providing services to certain demographics, and he had mentioned that a small group of people that he was talking to solicit for services, because they didn't understand what he was selling, or then they didn't think it was important. And it saddened me, but it didn't sadden me because they didn't buy what he was selling. It saddened me because I know that we make great decisions when we're informed, right? And because they weren't informed, I don't believe they made the right decision. But now, they did agree to learn more about the subject matter, so I think it was a win-win situation for everybody. But because that happened, I'll take this opportunity right now to stimulate discussions in the area of finance with the people that follow or take a little bit of input from me. So, as these warriors were saying, why invest? Well, we know it's to improve our welfare, but more specifically our monetary health, both current and future. Also, by managing our wealth effectively, we can obtain the most from it while protecting it from inflation, taxes, and other factors that relentlessly attack our pockets daily. Y'all know what I'm talking about. What is particularly useful in today's investment climate? Well, let's discuss some ideas about what you can reasonably expect to accomplish by what you learn, and therefore, what you can realistically expect to achieve as an investor in today's investment arena. Listen, unrealistic expectations can lead to disappointing outcomes, or even worse. Learning what you can reasonably expect is very important today. The nature of investment starts with defining your plans and identifying the instruments that can help you achieve your objectives, y'all. Many actually get it backwards, to include me at one point. We've all been in the apprentice mode at some point in our lives, just learning the ropes. So we ask someone blindly, what should we invest in? No. Shouldn't be that way. Good thing is that we now know better and understand how we invest should coincide with our plans and objectives for ourselves and our families, both now and for the future. First, what is your financial plan? Are you intending to buy a house? Decisions regarding the various types of insurances like life insurance, health insurance, disability, the protection of business and property, and finally, your plan for emergency reserve funds. This kills us right here. We're always seems to be, like a lot of us seem to be like one wreck or accident or hardship away from being broke because we don't have an emergency reserve fund. So once you have your plan established, you can manage and enhance your wealth by investing in optimal combination of your financial assets, essentially meaning that the collective of your asset holdings should be evaluated and managed as a unified whole in the context of a portfolio, right? So, things that we can invest in. We got certificates of deposits, we call them CDs, bonds, common stocks, or mutual funds. Other paper assets may include warrants. We got puts and calls, future contracts, convertible securities, as well as tangible assets such as gold, real estate, and collectibles. What is your investment process, guys? Has to start with an objective, right? I remember I asked my daughter one day, I said, go to the store for me. And she says, what do you want? So I ask her, why do you want to know what I want? She says, that'll determine which store I go to, or how I get there. Or should I go ride my bike? Should I drive? Should I, walk? And I was like, yes, you're thinking. Okay, so we got to have that plan. Financial assets, right? Some paper or electronic claims on some issuer, such as the federal government or corporation. We got real assets These are the tangible assets such as gold, silver, diamonds, art, or real estate that we mentioned earlier. Marketable securities are financial assets and that are easily and cheaply traded to organize markets. Technically, investments include both financial and real assets and both marketable and non-marketable assets. Now, I'm listing or saying a whole bunch of stuff because I'm not going to go into detail about any particular one in this forum. I just want you to have more of the tools that you need so that you can do your own research. And if we start talking, if the dialogue gets flowing and we start talking about any specific instrument, then we'll go back and we'll go in detail and talk about that. But right now, we can't even talk the same language if we don't speak the same language. So let's just, at a ground zero rate, put out some tools there. You put some tools out there, and we'll start collectively discussing how can we use these tools to best support our interests. That being said, let's start with marketable securities, which are very liquidable. So we'll talk about stuff that's liquidable right now, like government bonds, common stocks, or CDs. Now, in a perfect world, people have money to invest, right? But what about the billions of poor that don't? More specifically, the millions of our fellow warriors that don't. What do? From where do we derive our seed capital? In other words, where do we get our initial injection of funds so that we can invest to start with? That's a great question, right? Well, funds to be invested come from assets already owned, from borrowed monies, from savings, or foregone consumption. But what if there are no assets to start? No savings, no ability to borrow money? Well, y'all, that's not necessarily the end of the world. We can forego consumption. And let's not get it twisted. We do have very marketable skills. Warriors, don't underestimate yourselves. At very minimum, we have these skills, and thus, we all have wealth. If nothing else, let's convert those skills and services to services that we can value at a market and sell to make a reasonable income. Additionally, let's invest more in the warrior demographic as a power base. The initiatives, the businesses by us or for us, keep more money in our house, y'all. I didn't understand this concept fully when I was young, but I kept using it nonetheless. Remember, I talked about human capital, produced capital, natural capital, social capital. Come on, y'all know what I'm talking about. Y'all remember. Anyways, I won't get into detail about it right now, but I need y'all to think like this to start, ladies and gents. If seed money is the issue to achieve your dreams and you have nothing else, then you need heart and convertible skills. No bank, no financier can keep you from either. You are the gatekeeper in that regard. Let's start wrapping this segment up, but first, let's briefly take a look at the financial instruments, and I'll give you a fictitious scenario to clarify things just a little. So what I'll talk about 4 asset classes and the instruments within those classes, and just give a general overview of what they are. And I'm going to just list them like I listed earlier, and just do some research, y'all, and just look at them and say, okay, now I'm starting to see what these instruments do. Don't just look at the definition of them. Look at what they really do. Understand what they really do. For instance, let's talk about the asset classes. So first asset class I'm going to talk about is the debt, which is the long-term or greater than 1 year debt asset class, right? And then the debt short-term, less than or equal to 1 year, right? Asset class for equity and the asset class for foreign exchange. In the debt long-term greater than 1 year asset class, you have instrument types, securities like bonds, other cash like loans, exchange traded derivatives such as bonds, bond futures, options, and options on bond futures. Then you got OTC derivatives, which are the interest rate swaps or interest rate caps and floors, interest rate options, or exotic derivatives. In the debt short term less than 1 year, less than or equal to 1 year, instrument types, you got securities. These are the bills like T-bills, commercial paper, other cash deposits, which include deposits or CDs, exchange traded derivatives, which will be your short-term interest future rate futures, and the OTC derivatives, which are the forward rate agreements. And then the equity asset class, you have the securities, which are stock, the exchange traded derivatives, which are stock options and equity futures, and then the OTC derivatives, which are the stock option and exotic derivatives. And finally, foreign exchange. On other cash, you have the spot foreign exchange, exchange traded derivatives. You have the currency futures and the OTC derivatives. You have foreign exchange options, outright forwards, forward exchange swaps, currency swaps, and there's other stuff out there. But we're going to start with those right there, and I'm going to give you a scenario. So regarding the short-term, less than equal to 1 year asset class, we're going to talk about the T-bill, the Treasury bill, right? And that's Treasury bill. Let's look at it from this perspective. It's a short-term debt security. Remember how I described it earlier. It's issued for terms of 4, 13, 26, and 52 weeks. Now, another type of T-bill, the cash management bill, it's issued in variable terms, usually only for a matter of days, but we won't discuss those right now. Anyways, these bills are generally sold at a discount from their par face value, right? So, the discount rate is determined at auction, and investment increments are in multiples of 100, which just so happens to be the minimum purchase set for this particular instrument. So, for example, you may pay $990 for a $1,000 T-bill. Now, the payout of the $1,000 would occur when the bill matures in 4, 13, 26, or 52 weeks. Now, let's apply this to a fictional real world scenario. How can it be fictional real? That's crazy, ain't it? But anyways, all right. So, Ray and Billy Bob served in the Gulf War era, right? Upon discharge, they decided to partner up in an agricultural business venture since they worked so well together during active service. They didn't have much cash on hand, so they marketed their education and training and charged a fair wage for their services. As a result of their hard work and ingenuity, they were able to earn a generous amount of revenues. After paying their taxes and other dues, the two bought most all of the farm equipment they needed except for a $1,000 tiller for their produce garden. They didn't need the tiller for another 30 weeks, so they decided to invest in a discounted $1,000 T-bill at the cost of $990. In this fictitious scenario, the 26-week T-bill matured and the Warriors raised the money that they needed for their purchase. Their investment was in accordance with their financial plan, and all was well on the farm. Now, Warriors, when things get rough, many may run from the problem, but we get closer to it. Now, all joking aside, the financial aspects of our transition from active service has been a tremendous issue for our demographic historically, y'all. Y'all know this. Global issues may appear to only get worse, especially based on what you see in the news. And as such, let's get closer to the problem. A more complete solution for active to civilian life transitions. I'm talking holistic power base, y'all. Y'all hear me 1,000 times. I scream this. Not piecemeal solutions, because piecemeal solutions will no longer do. Pay attention to what's going on. Until such time, support our needs for good jobs, housing, and immediate medical care solutions. All right, y'all. Hey, I hated to rush through that information, but I just wanted to get you something out there real quick. Something for you to think about, something to stimulate conversation. When we're in service, guys, listen. We're war fighters. DOD fights and wins wars. We're at the center of that, and we have everything around us supporting, training us, and preparing us to be the best war fighters we can be. Once we transition out, y'all know as well as I do, all these services, medical, dental, all these things that we need are just dispersed. And it's very difficult to get to these things many times, if we can get to it at all. Then if that is the case, we can't rely on the federal government to do it. We can't rely on the civilian sector to do it. We have to use what policies are in place, and they have some responsibility, but fact of the matter is we got to lead the charge or it's not going to get done. And I know we can do it, and I know with the knowledge we'll make the right decisions, and we'll continue to do it. There are people now, there are warriors out there doing it right now, doing it big. I want to do it consolidated. But hey, that's another thing that we're going to talk about. Hey, I'll talk to y'all later. Much respect. Hey, I got to go feed these chickens. Talk to y'all later. Bye.